This is Eric Muathe with Muathe.com. In this video, let's take a look at how we can use past performance to identify stocks that could have the biggest move in any market environment. And actually, it is very simple. So what we can do here is just do a small exercise. This is just a random stock that I picked. Want to highlight this idea. And what we do is just take where the stock had the biggest move. So investigate, figure out where the stock had the biggest move, and see how well it did. So here we can see that was the biggest move in the mid-2000s. All right, so if I take this move here, let's say this breakout move here, which in hindsight we can see was successful. We can see the stock move from about, let's call it 23. That was in 2005. Quick look, and we can see that by sometime middle of 2008, it had gone as high as, let's call it 48. So talking 3 years, I would say that's a poor performer. It takes 3 years to gain just a little bit over 100%. That's not what we want. Let me show you an example of a good move. So here's a good moving instrument. This is Microsoft. In the 90s, was one of the best stocks in the market. As an example, take a look at this breakout. Just a quick example here. This we're talking about. This is now post-split. The stock has split many times since then. Well, you can see here $4, and in 3 years, let's go 1, 2, 3 years, was trading at $30. So that's what we're looking for. Something that can hold on to a major run over a period of time. So this is what we are looking for. Or take a look at Apple. Now this is, again, on hindsight, we can see in 2003, stock is trading at a price of $1. This is now post-split. The stock has split many times. And in a couple years, let's go here. This is 2. Within 3 years, was trading at 10. So it has more than 10 times your money in those 3 years. Well, let me see. 1, 2, 3 years. So this is what we are looking for. We are looking for evidence that in the past, a stock has had a major run. And in fact, here we can see in Apple's case, we can see a good run here from the lows to the high. That's a big move. We can even take breakout levels. Just take a look at how the stock performs when it breaks out. Is there a material move in price? Is the stock tripling in price, doubling in price after major breakouts? If that's the case, that's a good stock. Now, let's go back to the previous random stock here, which is FE. Now, notice here in the current market, the bull market, as of late January 2020, we can see here the best move it has had lately has been from about, let's call it 32 to the highs of 50. And this has taken 2 years. So this is exactly what we don't want to see. 2 years to move from 32 to 50 is poor performance. Yes, it is moving high, you're not losing money, but there are better stocks out there. And so what we did here was, just by looking at the past previous performance here, which is the best performance period, we give that a poor grade. So we avoid stocks like this, and we hunt for stocks that have already shown us superior gain. Here is Microsoft. In the 1990s, this is one of the best stocks. Had a huge run up, huge. And we can see Apple here did become a stellar. Now remember, Apple was a poor performer in the 90s. So in the 90s, poor performer. Poor. Compare that to Microsoft in the 90s. Same period. Microsoft was a stellar performer. All right. But anyway, Apple catches up and gets momentum. Actually, things start moving here, I believe was in 2004, 2003. That's when we first started trading this. Anyway, so we can see a good example of momentum here. Now, notice what they've done lately, and that's the point. Because they've already identified themselves as great stocks when they move. Take a look at Microsoft in the here and now. So from about, even if we take this breakout here in 2013, the stock has had a fantastic run. Remember, this is a large cap stock. This is not a small cap stock. It's a big company. Huge run up. Why? Because of the evidence it had in the 90s. All right. And of course, we can talk about timing. Why did the stock move sideways here for many years? Now that's a question for another video, but we can see there was a period of underperformance from 2000 all the way to 2013. But what you also see here is evidence of why we wait for breakouts. There's a breakout somewhere here, and then another breakout after a month of settling down here, and there's another breakout here. So even on hindsight, you can see that breakouts are the way to go, because they give you an instrument just as it begins moving, and you can avoid almost 13 years of nothingness here. But again, the key setup was this move here. This gave you an inkling that when it moves, it can move. And if we take a look at the current Apple chart, we see the same thing. If we take the most recent breakout in 2017, this large cap stock has had a fantastic run. There's a breakout there recently, and for 3 months in a row, almost 4 months, this stock has been on fire. Why? Because it already set the stage for this in this move here in the early 2000s. So if you want to own the next momentum instrument, you have to insist that in the past, when it was moving with superior power. So past performance must be considered before we consider making a purchase for one of these instruments that we have on our watch. Past performance is a measure of potential in the future. This is Eric Muathe with COMMODITIES. As always, good luck, peace, and blessings. Yes.